Hi everyone. Today is September the 27th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Very quickly, we're going to look through SPY and the Qs, set those up, and then we'll jump into the future. So from a daily perspective, and indeed from a weekly perspective, price action looks very healthy to the upside, right? So dips going to be buy zones, and into resistance, where a number of things that I'm watching are suggesting that we take some profit. All right, hanging around 562 to 560 should be a clean support zone. Allow the moving averages to come up together, and it looks good. Pullbacks are buy zones. Remember, pullbacks can be deep. So if you think the pullback is shallow and you get in, get out, and wait for the right setup. Let it show you what it's done. We're sitting inside of the range and value from a distribution perspective. We've got same thing going on with the Qs. We have weekly charts, not quite breaching higher, but people could say this is some sort of Gartley pattern. It could be, harmonic patterns aren't as popular as they were back, a dozen, 15 years ago, but they're certainly there. So that is a possibility. If we get into the daily, we can see that it is grinding to the north, a lot of wicks beneath, so waiting for the dip, a very nice idea, okay? The value area, let me make sure that I've got, value area high has lifted, so I'm going to adjust that there, and upside pressure events still look very likely, right? Don't try and short this unless you're doing it on very tight time frames, and when it collapses into support, you've got to get out. All right, I'll go backwards. Here it is on the hourly. Yesterday's 8 a.m. candlestick still holds everything that we are printing, to include everything that happened yesterday. And so, with the exception of this one wick, and as soon as it collapsed, we could look at that 8 a.m. low as our support zone. Today, this is the 4 a.m. candlestick formation. We're in the midst of building that 8, but we do know that the wall of worry we are walking up and through is this one. So yes, pullbacks are buy zones. This was a very deep pressure event. Hang on a second. No, I'll do that afterwards. Very deep pressure event, and so Fibonacci's going to help us get extensions into target. So I would say this is a take some profit here. You can add back when it comes in to test the VWAP or the value area high. Henry, how do you know it's going to do that? I don't know, but the slope of moving averages tells me that the pressure is not strong enough for it not to come back. Okay? If the pressure builds all of a sudden, then we know. But so far, doesn't look like it. All right, let's take a look at SPY 1 hour, and we can see yesterday's 8 a.m. candlestick formation. We're coming into the base of it. The low, this was the 8 a.m. candlestick from 3 days ago. It carries the low pocket of yesterday. And so today's 8 a.m. candlestick, yesterday's 8 a.m. candlestick could present the same wall of worry that we're going to walk through. Listen, pullbacks are buy zones. This time it happened to come in to this level, but notice that's also the low of the 4 a.m. candlestick formation. So it's better to look at price to establish where your entry is going to be, rather than only if it comes in and touches your moving average. All right? Just wait for price to evaluate these formations, but buy the dip, still in force. All right, let's take a look at the ES. Right, if we go to the week, nice up pattern, pullbacks or buy zones. This has had a very good week. The pullbacks could get pretty nasty, about 100 points deep, but it is still running very high from the spaces, and brand new highs getting made just about every day. All right, pullbacks are still buy zones. Let's go to the hourly formation. Here is 4 a.m. yesterday, and then the collapse of the motion. Here is 4 a.m. from days past. And then here is today's 4 a.m. formation. What are we doing? What was this one? Midnight. I forget to do the midnight one. 22, 23, no, the reason I didn't do the midnight one was because that was the midnight last night, night before last, excuse me. Last night's midnight was exactly the same place, so I did not draw another one. And then, we're back here in our opening range. So what do we expect? Look at this formation. It's very sideways. We could break, but if we break in a sideways pattern like that, there's not enough motion to keep us running. So we're going to collapse into resistance somewhere. If pre-market value area, I need to change this. Why is it not? There we go. Same width, just has popped up just a bit into the value area high. That's where we're seeing a lot of resistance. A shorting pattern looks pretty prevalent there at this juncture, but I would wait, let it move up and exhaust, and then trade it back into the pattern based on momentum, which is flat, right? NQ. Weekly, sideways, daily, recovering very nicely. So bullish all the way around, right? Deep dips, buy zones, but only into resistance and you get out. Here is the 4 a.m. candlestick from times past. This is the midnight candlestick from 2 days ago or yesterday, and then this is the opening range candlestick. And you can see midnight, night before last, is going to match here today, the opening range candlestick. Midnight here is right on top of that opening range. And then the 4 a.m. candlestick formation is this big one right here. And you can see that we are working up above that particular zone. All right, so upside pressure is definitively what's necessary right there. And this sideways momentum says the up should fade and come into the heavy congestion, at which point it could rise again. So take note of the levels. They're the same ones from days past. I'm just trying to show you, you can do this for yourself. Pull it together. Oh, for goodness sakes. I'll do this here. Value area high, value area low. Okay, so now what we've got is the weekly formation, upside. Then that's looks very clean. It's the cleanest one of the bunch. So we can use a Fibonacci extension to push us to the upside, but we'll use the value areas to help us do that instead, right? We're going to use the Fibonacci extensions of the value areas to help us determine what the upward flow is going to look like. Right now, it still looks like big bounces are going to sell off. Okay, that's what it looks like to me. Let's go to the hourly chart. And the tighter value area, high area, showing us resistance. This is a flat formation, but it could break to the north first before, oh, look at that. Must have been a news event that just happened. So, and that's exactly what I was saying. Let it break to the north first. Use your short action way up at the high wick and see what happens there. Let it settle out for a couple of moments, and then you'll know what's going on. That was absolutely textbook example of creeping out of the value area and then just collapsing right back into it. Look for candlestick bodies to the left that allow you to first get in, and if it doesn't immediately tumble, it's a scalp trade. All right? Okay, that's it for me. Take care, everybody. We're in the midst of hurricane cleanup. I'll see you on the streams.